Okay, let's jump right into this explainer and look at a massive piece of financial news that might literally be sitting in your mailbox right now. We're talking about the largest cash payout in State Farm's entire 103-year history. Seriously, have you checked your inbox or your bank account lately? Because today, we're breaking down a historic event where millions of drivers are getting actual cash back. But as with any massive financial move, you've got to ask the big question. Is this just a simple act of generosity, or does it expose a deeper strategy going on within the insurance industry? We're going to look at exactly who gets this money, why it's happening, and of course, the catch.
$5 billion. I really want to emphasize the sheer incredible scale of this cash return. This isn't just some minor credit hidden in the fine print of a future bill. No, this is $5 billion going straight back into drivers' pockets. It's an absolutely staggering amount of money for a private company to return to its customer base all at once.
Now, while $5 billion as a whole is massive, there is a tiny number that matters a lot to you individually. To actually receive a physical check or a digital deposit, you generally have to be owed at least a $10 minimum. So, if your calculated share of that $5 billion falls under this $10 threshold, well, you probably won't be receiving a payout.
So who actually gets a slice of this massive pie? The qualifications are pretty straightforward, but they're highly specific. This dividend is entirely tied to your policy in the year 2025. If you had an active personal auto policy with State Farm Mutual at literally any point during 2025, you're likely on the list. And when you zoom out and look at the scope of this, we're talking about a dividend that covers more than 49 million vehicles across the country. But how do these numbers actually break down depending on where you live? State Farm is returning a percentage somewhere between 4% and 10% of your 2025 premium. But here's the thing, that percentage changes based on local regulations and how much profit the company actually made in your specific area. So while the national average payout is hovering around $100 per vehicle, the variations are wild. Because of local reforms, drivers in Florida are seeing an average of $173. Down in Mississippi, it's $124. Meanwhile, a policyholder out in Oregon reported receiving just over $75. Basically, where you park your car determines the size of your check.
I do want to make one crucial point crystal clear before we move on. This is not free government money. It's not a stimulus check. This is a return of your own overpaid premium dollars. You're getting this cash back simply because you paid into a system, the company had an extraordinarily good year, and honestly, they just didn't need all the cash you handed over.
Part 1. The mechanics. Why hand back billions?
So why not just keep the $5 billion, right? Well, the answer really lies in their corporate DNA. State Farm is a mutual insurance company. What that means is it's owned entirely by its policyholders, not by a bunch of outside shareholders on Wall Street. Look, in a publicly traded company, massive profits get paid out as dividends to investors. But in a mutual company, when they strike a massive profit, they are fundamentally designed to give it back to the owners. And in this case, the owners are you, the customers who buy the insurance.
The real driver behind this payout is a dramatic financial flip. Back in 2024, State Farm took a massive hit, bleeding $2.7 billion on underwriting. But then, look at 2025. They posted an extraordinary underwriting gain of $4.6 billion. That is just a massive, unbelievable swing from the red straight into the green.
So what was the exact recipe that created this windfall, ultimately leading to a record $12.9 billion in overall net income? It was basically a perfect storm of positive factors. Auto repair costs decreased, there were fewer collisions out on the roads in 2025, and crucially, this is the big one. State Farm had already raised their rates significantly during those high inflation years of 2022 and 2023. So they were collecting these really high premiums while paying out far fewer claims.
Company president and CEO John Farney summed up this unique situation perfectly. He stated, "As a mutual company, State Farm Mutual is able to provide value directly to our customers. Because they don't have to answer to Wall Street analysts, they can leverage this massive recovery to directly reward the customer base that stuck with them through all those previous rate hikes."
Part 2. The action plan. How to actually claim your cash.
So, how do you secure your money? The best news here is that you don't need to hunt down and file some complicated claim form. The process is almost entirely automatic. First, keep an eye out for an official notification via email or physical mail, and seriously, check your spam folder. Second, log directly into the State Farm app or website. A ton of users are reporting seeing a very clear banner right on their dashboard that says, "Good news for good neighbors," which has a direct link to claim the dividend. Finally, you just follow the prompt to choose how you want your money.
And you really do have some great options here. State Farm is offering digital payments which include PayPal, Venmo, or Zelle. Or, if you prefer, you can opt for a traditional paper check. If you want the money fast, digital is absolutely the way to go. In fact, some users on financial forums have reported selecting Zelle and seeing payment dates set for as early September. Just keep in mind, if they don't have a valid email on file for you, they're just going to default to mailing a physical check.
Okay, I want to stop and issue a critical warning right here. If you're logging in to check your status, you must use your 2025 policy number. Several people have been noting online that their policy number actually changed in 2026. If you search with your new number, it might show that you're getting absolutely nothing. Use the 2025 number. And hey, if you get stuck, you can always call their Dividend Customer Contact Center directly at 1-888-808-9532.
Part 3. The twist. The homeowner's insurance catch.
Look, if handing out $5 billion in pure cash sounds a little too good to be true, we need to pull back the curtain for a second. To understand this twist, we just have to look at a very blunt statement from State Farm's Chief Operating Officer, Chris Sell, during a recent media briefing. He openly admitted, as good as the story is on auto insurance, the story on homeowners insurance is a little bit different.
Let's juxtapose these two completely different financial realities operating under the exact same brand name. On the one hand, the auto insurance division is incredibly profitable right now, and they're issuing these massive refunds. But on the exact opposite side of the spectrum, the homeowners insurance division is struggling deeply, and they are actively raising rates on consumers.
So what exactly is driving up these claims and pushing home insurance premiums higher and higher? Well, it's a brutal combination of devastating severe storms, widespread wildfires, and the massively inflated costs of the materials and labor required to actually rebuild houses today. A lot of policyholders are reporting that while they happily received a $100 check for their car, they simultaneously got hit with a much larger bill for their home insurance this year.
And this brings us to a really fascinating strategic theory. Now, we are reporting impartially here, but critics argue that this auto refund might actually be functioning as a calculated loyalty tactic. It's something called the captive customer strategy. Think about it. If you bundle your home and auto insurance together, you are far less likely to leave the company for a competitor. Critics suggest that giving you a $100 auto check is a brilliant way to soften the blow and retain your business when they inevitably raise your home insurance rates by hundreds of dollars.
Part 4. Final thoughts. Be an educated consumer.
The core goal of this explainer is to ensure you are an educated consumer. So, if you're a homeowner currently bundling your policies, you really need to ask yourself, will your $100 auto refund actually cover your home insurance increase? I absolutely encourage you to claim your cash. Go log in, grab your digital payment, enjoy a nice dinner, or just stash it away for a rainy day. But please, don't let a small rebate blind you to your total financial picture. When you're dealing with two entirely separate insurance lines, it always pays to shop around and stay informed. Thanks so much for joining me today, and we'll see you next time.